Good morning, everyone. Let's have a look at your markets for today. We're starting with the economic calendar. Do we even need to look at this? It's the first Friday of the month. We know exactly what's happening. We've got non-farm payrolls and unemployment change or unemployment rates. That's key today. On the US dollar, anything else on the dollar is non-consequential, because the unemployment rate and non-farm payrolls will set the standard for the day's trading. We should probably see a spike, something like a whipsaw. I could potentially look to trade that live today to show you an easy way to trade that. Anyway, but I'll think about it. Maybe I'll do that today. And then the ECB's lane is speaking as well at 5 GMT plus 2 my time, so that's in about, what's that, 9 hours. I probably won't trade this. I'll trade the unemployment rates for the dollar, maybe the Canadian one as well, potentially. Then we've got the pound with construction PMIs that could move it. So if you want to watch that. And then we've got a member speaking as well for the pound. German factory orders weren't good on the euro this morning, so we have that slight pullback. Yeah, I mean, this is pretty straightforward. We know what to expect today. Now again, when it's a big news day, none of this matters. None of it matters. We've got the S&P down by 3.5%. Did you see that move yesterday? Right on the day that I say that's market insanity. It can't trade that high. It pulls back 3% or 3.5%. So yeah, it's been quite interesting. People should have seen it. I think a lot of people saw it and realized that it can't maintain that level. So anyway, everything is a strong sell. Everything was selling off yesterday. So, I mean, well, this one's neutral. IBEX. Everything else was selling off. And then commodities. Hello, gold. Are you back? We don't know. Silver neutral. Could this have bottomed out? I don't know. I'll do a full analysis on maybe potentially gold or silver today and see what we can see there. Okay, euro dollar is neutral. Pound dollar neutral. Oh, these are, because obviously it's non-farm payrolls. Everything's going to basically flatline for non-farm payrolls. It's at values, fair values. So now it's all about what the non-farm payrolls and the unemployment rates state. That'll move these. So we'll probably see a few dojis leading up to this this news event at 2:30. Non-farm payrolls and unemployment rates. So that's what we're watching today. Okay, so we can ignore this. I just want to just show you. I changed the market news RSS feed down here. I think the one I had didn't post nearly enough information. It was one a day maybe. So this one at least covers more ground. Don't know if you know, but the Reserve Bank of New Zealand outlined its future policies and what they could use to sustain the economy. And one of the things they mentioned as a possibility would be negative interest rates. So that's something to keep an eye on. Definitely need to keep an eye on that. If they do implement negative interest rates, that's gonna make it an opposite of a reserve currency. So if you have a reserve currency, a good currency, let's say the Australian dollar, for example, and you pair that up with this, that could be where you just profit from swaps if they go negative. We used to do it with the dollar yen. When the dollar was really strong and the yen was negative, you just leave your money in the dollar yen, and you know, cash in on the swaps. But anyway, that's neither here nor there. Let's move on. Let's go to the charts. We'll start with dollar index as always. So it went up to that level, came down to the 38 level. It should push up further now. Checking if it breaks this moving average line, it should push further, or it could reverse here. It depends on what happens today, so we'll keep an eye on non-farm payrolls to determine direction. This one, we had that big move down, big move down. So let's zoom in a bit so you can see it. Huge move. So that was about 15,000 points. So that is about 1,500 pips that it came down yesterday. That's insane. That's absolutely insane. But I called it, so I mean, hello. Remember that target level I have there. This one's the minimum it should reach, but I expect it to go all the way there because certain key, this line, for example, is going to hold for a while and offer some resistance. Well, support technically. It's going to offer support, so it'll flatline here. Once it breaks, you know, this is the next level for me, I think. We'll see. We'll keep an eye on it. I don't trade this. It's just a barometer for, you know, what's happening in the market. So silver, I'm hoping for the 100% retracement. That would be the bottom. If it gets there, I'm definitely buying. I'm definitely buying at that level. We'll see, because there's an actual support level here. That's probably gonna, it turned just before it. You can see that just before that level it turned back. Now it's trying again. So if this level breaks and it reaches this one and this level holds, I'll probably put in a sell limit over here for silver. Yeah, I don't really have to do a full analysis of this. I mean, it's just doing what it's supposed to be doing on the pullback, going 100%, then it should go back up. If we could get 100% pullback, oh, I'd be so happy. Can you imagine buying at that level and then watching it go to there? That's about 280 pips. That's very nice. That's very nice. It's on this pair, it's about 8 times as much you know, reward per point movement or cash value per point movement as on any other pair, any currency pair. It's 8 times the value. So, you know, let's say 250 pip, or in this case 2,800, yeah, 280 pip move is the equivalent of about a 2,500 point move. So that is a good move, I think. Anyway, we'll move on. USD, yeah, the Aussie struggling, but it's at a key resistance now, so we could potentially see this. It's leg 1, 2, 3. If you know anything about Elliott wave theory, leg 1, leg 2, leg 3. So leg 3 would usually be almost a Fibonacci ratio of this, so potentially 61% move at the very least would be my guess. So we'll see if that holds. if this level holds where it's at now, we could potentially see it push back up. But that would mean that you'd be trading against the dollar, and the dollar is very strong at the moment, so more likely that this is going to it's going to do this. That's probably more likely, if not, on the back of the vaccine. Breaking news from yesterday that the vaccine is expected to be released on November 1st. If that date holds, we could definitely see this happening. So unless something changes in the next day or so, we should see that. AuCAD, yeah, it's broken through that level, and then it will probably break this level as well. So we should see a further move to the downside. Euro odd. So the euro strengthened very well yesterday on the back of a bunch of, against a bunch of different currencies. So we'll see if it holds. It's at a key level now. That level there. That's key. It was resistance and support more than once. So it needs to break to either side now. We'll see. Same thing on the euro pound. I made some money there. I had my little indicator notify me that this is turning. And when I confirmed the breakout, I made money. I bought and went up to there. I actually got out there, probably just below that. So I was happy with that. Easy money. And if it's like this breakout was so obvious, it had to go. I got in there, this level, and it went all the way to there. So very nice move I had. Very happy with that. Anyway, euro yen, yeah, we should see that. Remember, I spoke about that move being opposite, creating a W. We should see the move to the upside. And euro dollar, this is just a pullback. I think dollar strength should still keep going. So what we're looking at here would be a Fibonacci retracement of this. Not even. It hasn't reached that level. So interesting. But it is around the 23 mark, so bottomed out. So we could potentially see it move up again to there, at least. If it is I remember this key support level. That's why it bounced here instead of there. Anyway, we'll see what it does, but I expect it to go down. So when you're looking at the Elliott wave theory, that's leg 1, leg 2, and then leg 3. It has to be longer than that, but you catch the drift. And this level should hold it again. This is 1.17600. Should hold. We should see a move to there. That's what I expect to see, but I could be wrong. Pound, New Zealand dollar, that's a breakout. We should see this. Because of the New Zealand dollar announcement, there could potentially be a negative interest rate. A lot of people were just taking their money out. And I mean, that's to be expected. When it does happen, you trade or buy the rumor, sell the news, and vice versa. So on bad news like that, it could potentially go negative interest rates. You would rather be safe and take your money out. So that's what a lot of people were doing. You see that. So it makes complete sense, this move to the upside, you know, for the pound. Even though the pound's actually down against, you know, the dollar, for example. This is because of the New Zealand dollar, the Kiwi, not because of the pound. Okay, this is obvious. We have dollar strength. You can join your channel. It should respect that. If it does, it's going to keep going down. New Zealand still should be going down. Don't see the New Zealand dollar recovering from bad news like that anytime soon. Yeah, this is a breakout. I actually called this. If I zoom in, you could still see the little arrow I drew. Totally called this yesterday. You know, it was pretty obvious. It was a beautiful breakout. Look at these higher highs, higher lows, obvious uptrend, easy trade. Didn't have to guess about this. I specifically said it was gonna go to there. It wasn't not. It could maybe scenario. It's definitely doing this. I said this yesterday, and it did exactly that. So, I mean, if you didn't want to capitalize on that, I don't know what to say. That was easy money. Dollar Swissy, it's ranging. It's still ranging. The Swissy is not doing much. It's really not doing much. So I'm just staying out of it. If it reaches these levels, we could potentially add this level, that level. If it reaches this level or that level, we could potentially range trade it. Dollar yen ranging, annoyingly so. It's been ranging for a while. It had a little move and then back to ranging. So what do? You know, just trade it at the extremes. Yeah, I'm not going to speak about this. I looked at this yesterday when it was breaking out there. It obviously did that. You know, now it's a wait and see. We should see the pullback. Leg 2 of Elliott wave should be happening now. Potentially see that move to there. I think that's what's going to happen. I'm not sure, but I mean, I don't trade this. I was just looking at it for interest sake. Stop levels of 180 points is just too much. Anyway, so yeah, I want to look at gold quickly because I don't have gold on my chart. Let's just open that up. Close that again so we can have a big screen on this. Put on a naked template. Okay, here we go. Let's zoom out a little more. Go to the bigger chart, the daily, and see what we can see. That's support. Wait, that needs to be, just change the color, magenta. And draw in a few more. That obvious level there. I'm not sure if we need this one, but that's an obvious level. We've got that level there. That one. And then the very top one. It's not even necessary to draw that in. Okay. Let's go to the H4. I mean, look at this. Let me just draw this in as well. I'm going to do it today because that's obvious. And then just rate and see what we can see. Let's zoom out. Yeah, it's actually not at the bottom here, and it's not at the bottom there. That's better. Okay, so breakout of the trend line on gold. I'm not sure what that would indicate because we know gold is going down, but it's ranging at the moment. It came down significantly and now it's ranging. So what that means is we're looking at a flag pattern. And let's put in the flag pattern and see what we can see from that. Unray this. Oh, no, that's the wrong button. That button. This one's not right. Don't use the upside of the flag. Yeah, it's difficult to draw this, but we'll use those 2 points. Now a flag is usually a continuation pattern, and this has come down, but this kind of wedge triangle could go either way. I think this is coming down further. Surprisingly, I didn't think I'd say that, but because I'm strongly biased that this is just a pullback and that it needs to go up again. But we're at the bottom. So what I want to see, let's go to H1. What I want to see on this for the upside is this level holding, this trend line holding. We have this key support level that held. It's about 1924.82. It held about the 1925 level, I guess. Be a more accurate reading. That held, and it should go up now. So move to there. No, that's not a line. Sorry. So I expect to see that, and then test this line. And when it breaks that line, it'll go up again. Now, why I expect to see this is because that market insanity that was going on in the S&P, the people taking out the money there needs to put it somewhere. And my best guess would be gold. So I expect to see that potentially today even. Well, we'll see what the non-farm payrolls do. That could potentially mean that people put their money back into the dollar. You know, if the greenback is strong, people tend to default back to it. But if non-farm payrolls are bad and it looks like a bad outlook for employment, then it's coming to gold. So we'll keep an eye on this trend line and that level. 1925 level, I think, is key. And if that level holds, we'll see it push all the way back. And then we could see the break to that level. That's going to be the key. And if it breaks that, then the sky's the limit. So that's going to be key. So for today, this level is key. Let's call it the 1980. And this one is support 1925 and 1980. That's your key levels to keep an eye on today. If one of them breaks, you know it's moving to the opposite. So, I mean, this is a pretty straightforward top-down analysis. Watch this level, watch that level. If it breaks through, it's going to push down to the next level. If this one breaks through, it'll push to that level. But then we could potentially see the move all the way to the upside, because something would fuel that move. You know, if it's a weaker greenback, or, you know, people taking all of their assets out of the S&P and stuff like that, that should fuel the gold rush again. So that's what I expect to see. I mean, I could be wrong. It could break through here and go there, but I expect to see that potentially today even. but we'll keep an eye on it. I'm happy just to wait and watch. And then obviously if that happens on gold, then silver won't reach the level that I'm hoping for. Let's zoom in. Silver won't reach this level. So, which is the 2600 level is what I'm hoping for. But I mean, if it turns here, if it creates the V shape here, then I mean, we could go long if it breaks this level, the 26,860 or 850 level. It's actually 850. Yeah, if it breaks that, then it'll go up. I'd have preferred buying at this level, you know, knowing that it's going to go up eventually. Would have been happy to buy at the lower level, the 2600 level. But you know, you can't always get it perfectly. So if it breaks that, go long. If it comes down, go long. And then gold, if it breaks that, go long. If it comes down, go short. Well, or maybe potentially wait for this level and then go long. It should hold. If it's ranging, it'll stay within these two lines. 1910 and 2000 lines. We should see it stay within on the downside. It should stay above 1910 and then push up again potentially. So I mean, if I was a gambling man, I would just go long now, but we wait for confirmation. We do it safe, so don't risk it. Just don't risk it. So anyway, that's what I expect to see. I don't know if it's going to happen. Everything depends on non-farm payrolls at the moment and that COVID vaccine. So we'll see. And of course, the market insanity on the S&P 500 that needs to recover. I mean, let's get real, people. Let's just trade it at value levels or zones. You know, this is a zone. What I drew in here, you know, anything between these two, that's value. That's, you know, where we want it to be. That's my idea of what the S&P should be doing. Every time you go above that, market insanity gets involved and it just plummets. So don't let it go above that. It plummets there, it's going to plummet again. We don't want to see it plummet. We want a consistent move in value areas. You know, you would potentially draw this as a equidistance channel. You know, do this, something like this. Let me just get that point perfectly. There we go. And move this down to that level. There we go. That's your value zone. That's where you want to trade. So it needs to recover. Come on, it can't be up there. Get real, people. If you believe the hype that it could just keep going and going and going, you know, you probably lost money on Bitcoin as well when that bubble broke. So I mean, if you've already had the opportunity to learn the lesson, don't make that same mistake. Nothing can trade up there. Not even the S&P on the back of tech stocks, especially not the S&P on the back of tech stocks. So, yeah, I mean, it should come to value. Dollar, we should still see it strengthen. I don't think on the back of the vaccine, I don't think it's gonna come down unless the news breaks that the vaccine won't be ready by November 1st, then obviously the dollar will lose strength again. So, we've got Elliott wave theory applied here as well. 1, 2, next move there at least. I think they actually, I should see it reach that level, but you know, be safe, take your profits there, do the safe move, and you should be fine. So we'll see. I mean, I draw this in for myself so that I can compare the calls I made with what actually happens, which is nice when you see something like this do exactly what you predicted. You know, it gives you the warm and fuzzies. Anyway, I'm going to call it now. It's a bit longer than I expected, but I did want to do a full gold analysis. So I hope this helps. Good luck and enjoy.